And it's my pleasure to be able to introduce to you Tim Ord of the Ord Oracle. Tim, how are you?
Good, good. So, kind of unusual market today. It's anyhow, we got a lot of divergence. Actually, if we can just jump into it, I'll show you what I'm looking at.
Sure.
The first
Yes.
chart is the daily SPY, and we're looks like we're breaking out here. Is where we are right now. Or I did this a couple hours ago, and I'm looking at the volume right now, and we're not too much higher than we're probably up about right here right now, and we're not going to reach. Once you break above previous highs on the SPYs, you should have volume at least equal, if not higher, than the previous highs. That's not going to happen today. We're going to be, I don't know, probably estimate, we got a half hour to go here, and we're probably going to be about 20% lighter than the previous days. And to break out, to have a valid breakout to the upside above some previous highs, which the market's basically been trading sideways here for basically a week, almost a couple of weeks here. I think it's 10 trading days going sideways. And finally, we're breaking above those highs. So volume-wise, you should at least have, 90 million somewhere up in here, at least over 80 million, and we're not going to do that today. Like volume's coming in around 50 million right now, so this is probably a false breakout. And you go to the bottom window, and this is a VIX. In other words, when the SB hits a higher high, which it did, than the previous highs, the VIX should make a lower low. And that's not also happening here. We're actually making a higher low. So I'm not chasing this rally. We do have a little bit of panic, or actually decent panic in the fixed and trend, as I've always been saying over the last couple of years. You got to have panics at bottoms. Back on, I think this was the 16th or 17th of June, we had a trend close of 1.35, and the 17th we had a tick close of 234. So that would imply the market was basing. And we finally did break out a couple of days later, or actually 3 days later. Now we're breaking out, but volume's not going with it, and the VIX is not hitting a new low here. So what does that mean? Well, it's I put it this way: I'm not chasing a rally. I'm still.
Tim, can I just ask you a question, because I think this is the speed with which the market was digesting all those big gains, even into Friday of last week, with the news over the weekend, and the speed with which the criteria that we can consider Middle East conflagration, Middle East gold and oil being imperative to monitor always whenever there's something going on there, the speed with which that both of them have come down, do you think that you could see a price catch up in the volume that comes in, because it was just so quick? People haven't really had a chance to. Yesterday, from the low to the high was like 700 points. Today, we've got another one of those moves. So it's the surprise factor, and could there be a catch up in volume? What do you think? Is that a possibility?
No, I actually take indicators as they show it to me.
Okay.
And so, could you be right? Yes, but from long-term trading, I guess, I take the facts as they come at me. If they change, then I'll have to change with them.
Right.
But, can the volume pick up tomorrow and correct everything that you which is what you're talking about? Yeah, sure. Then I'll change my view. Until that happens, I'm kind of questioning this rally, especially this is, the summer doldrums. If this was like September or something, I'd be more inclined to chase after this rally, because that's usually you get these big moves and stuff, not during the summer, but a lot of times, the September, October type rallies. And so I'm thinking this is not the time to chase it. If the volume picks up tomorrow to say 100 million shares, I could eat crow. So we'll see if that happens or not. I don't think it will, but we'll see. But anyhow, that's what the short-term picture is to me. And again, the volume is not lacking on on this current break above the previous highs. So let's take a look at the weekly, see what's going on. If you notice, we're banging against these highs right here, which is basically 610, give or take, up in that region. So where we at? Yeah, we're 607 right now in that vicinity. So we're banging against these highs. And if you notice, if you look at the volume from these highs, you go down here, you know, this volume right here is actually lighter than the volume over here. So in my opinion, you're banging against those previous highs. This is a weekly time frame. You're banging against these highs currently on higher volume. So eventually we're going to break through those highs. Once you start hitting previous highs and higher volume, you can still have consolidations, but usually they're minor, and the market's going to break higher eventually. So at one point, I thought we might get back down to 70. I thought we were kind of building a top here, and we're going to fail and go back down to 70. We still may, but it's almost looking like now the previous highs of around 590 is going to hold. So I think we're going to bang against the highs, come back down, then and probably start up. That's kind of what the weekly suggests. So once you start again breaking previous highs on higher volume, which we are, we're almost eyeballing it here. It looks like about double what it was back at the previous highs of early 2025, the January, February time frame. So that's bullish. It's just the near-term picture is a little bit confusing. You know, at one point I thought we were building a right shoulder, and I think the market is not going to build that right shoulder now. I think we may come back down, possibly 590, and probably go right back up again. It's what it's starting to look like. So we may start breaking out, you know, maybe not this week, because I think today's rally is a smoke screen, I'll put it that way. But I think we'll probably come back down again. And here's the weekly, if you look at the bottom window here, here's the, which is not ideal. You know, the S&Ps are banging against previous highs, and also the VIX still making higher lows, which is another divergence. But you got a positive volume divergence, so I don't think that's a minor top of any consequence. So it's just kind of back and forth. But I bet before the week's out, I think we'll see 590 again. That's what I'm thinking.
Good. So, and we'll be back, folks. We'll be talking about the S&P. We'll be talking about gold, correct? And,
yeah, a little bit about gold.
Yep, we'll be back in a moment. Basil Chapman's sitting in for Tommy O'Brien, and this is Tim Ord from the Ord Oracle. We'll be right back after these messages. Hi, folks, we're back, and we're on with Tim Ord. We're looking at the Dow. Dow is up over 500 points. The S&P is up over 70 points, and we're on with Tim. Tim, can you continue, please?
Yeah. Okay. I flipped to a monthly chart here. This is the monthly VIX down here. The middle chart. This window here is the SPY. Whoops. Get back that chart. Yeah, the monthly SPY. And you know, the last high was this high back in February, which is right here. And if you notice that volume, this month, you know, it's not even over yet. And I drew a line across here. If you kind of see it, this month's volume is already higher than the previous high of February's volume. So on a monthly chart, that's bullish. So we're attacking right here. We're attacking this high right here. Okay. We're not quite touched it yet. So we're touching, or we're in the process of testing that high, and already we have higher volume. So the monthly charts have flipped to bullish. You can still have pullbacks, but usually pullbacks are fairly mild. So how big a pullback, don't know. But so you got the monthlies bullish, and if you go back to the dailies, see you got something a lot of different. You got light volume breaking above some previous highs, and on the monthly you got higher volume breaking above the previous highs. So the bigger time frames roll a time frame. So in effect, if you had to be in the market, you should be long according to the monthly charts. Not saying tomorrow's going to be an up day, but eventually you're going to keep going up here because you got a sign of strength breaking above some previous highs. You're breaking the previous highs and higher volume. That needs to be happening. I also got an RR here. That stands for railroad. And if you notice this volume here, and this volume here. Actually, this volume's higher, but the volume are pretty equal. If you notice, these two candles here and here are pretty equal, and this is a little bit higher volume. So you got big volume going down, or actually, excuse me, this volume or this candle here is about equal to this candle, and this volume here, which is basically this candle right here, is about equal to this volume here. And if you notice, those are parallel. You got parallel volume, pretty much equal, and you got parallel candles. They're about the same length and stuff. And so it looks like a railroad track. So you got volume matching volume, and you got price matching price. And that's what happens at major reversals. And this is on a monthly chart. So back in May, it really flipped to bullish. You had big down volume, reverse had a big up volume, and that suggests a bull market going forward. You can have consolidations or so, but in general, the market bottom is in, and an impulse wave to the upside more or less has started. Even though you may see consolidations on the weekly and daily time frame. So I wanted to point that out. So now you're breaking previous highs and higher volume. That's also bullish. So the only thing really negative on the market on a short-term basis is the dailies. The dailies are, if this breaks a false breakout here, I think it will come back down to this area right in here. So I think that's probably what's going to happen. This volume today should be at least equal to the previous days we had, and that's up around at least 80 million, if not higher. And we're not going to reach that today. So that's that. So am I long right now? No. Will I be long if we get the pullback? Probably yes. If the market continues higher, for some reason the market picks up volume tomorrow, will I be long? That's a good maybe. So I'll have to see. But today is not a breakout day that's supposed to happen. You're supposed to see a sign of strength through the previous highs, and today is not. That's not happening today. So we can flip to the gold market real quick.
Good.
In a nutshell, this is what's happened. I think the bottom, or I think the top, is in. If you notice these 2 days right here, you got a bearish candlestick pattern. Shooting star, I think they call them. And here you go back up and test that shooting star. So if you look at the volume on those days, you got volume here coming in a little less than 150 million shares. This is a weekly chart actually, and the next week you test that high almost to the penny, and volume comes in at least 20% lighter. Looks like about 100 million shares, maybe even 30% lighter. So, to my opinion, the top is in of some sort. So, if you can't take out the previous high on higher volume, it'll fall back, attempt to take out the previous low. Well, previous low on the weekly chart is this period right here, which is that'd be made be this. Looks like a second week in May, mid-May, which comes in around 45. So we're going to take a shot at that low. If you test that low on an equal volume or higher, you're going to go down. If you can't hold that low, you could go down to the next low, which is basically this low, and that's around 40, actually 39. So at minimum, I think you pull back to 45, and the door is open to pull back to around 40. Depends how this low is tested on the weekly time frame. So even though the market really had a decent run, really had a lot of energy to the upside, it's due for a rest. And so either 45 or 40 was coming up. When it'll happen, maybe July, August. It takes time. I got out in mid-April around the 50 range, and I've been out since, even though we're up to a test here. But actually, this high here tested this high on 80% lighter volume. It shows, so that's a weak. It's a fairly bearish sign. But when you test a previous high on 20% or even greater, that's a real strong sell signal. So the weaker the volume on the retest, the stronger the sell signal. So this high is pretty strong. So nothing real submission to the downside, but I think we'll see 45. This is on the majors. GDX,
right.
There's pretty AEM and I don't know, all of the Newmont Mining, all the big ones. And if you look at that pattern on GDX and you look at the major gold stocks, all those patterns look similar.
Right. So AEM, Agnica Eagle, had a high back on this is, I think it was April, and it retested the high the week of the 6th of June, and then it started giving it up. And for my technicals, the MACD started to pull back, stochastics pull back, but the 9 is still holding very strongly. So it's very interesting. The speed with which these start to come back is going to be very important. But I get your point exactly with the test of the double tops. How it reaches that right side test is going to be very important. Has been very important.
Yeah. So it's just on the bigger time frames, I'm really actually super bullish. And a lot of these small ones, if you look at the monthly Bollinger Bands and the volume coming in on these small ones, we're still in the early stages of a bull market. Not saying we're going to have any fun over the next several weeks or so, because I think this pullback will be halfway persistent into August. But the bigger time frames look really bullish. So
just as we're about to end this, could you just tell folks how they could reach you?
It's ord-oracle.com, and go to that website. You'll see, or put in Tim Ord, Tim. My last name's Ord, and you'll see some articles in there and a bunch of other stuff, and that's you can find me easily. So
thank you very much, Tom. Always great to hear you and what you have to say. It's really important. And Thursday we'll see you again.